Well, holy smokers, this ain't no jokers. Look at this, guys. This is a rare video in which, oh my gosh, you're looking at me, I'm looking at you. It's not like a slideshow video. But here today, I got a real treat for you guys, okay?
Hi everyone, welcome back to the PlantStock channel. My name is Jesse, and on this channel, we focus mainly on plant-based stocks and companies. Tonight, I just wanted to take a look at Jeremy, the financial wizard from Financial Education. Recently, he did a 180 on Beyond Meat, comparing the company to Tesla, the next big thing. 10x, 20x, or even 100xing their revenues seems to be within the realm of possibility, according to Jeremy.
Number three, the company can 10x to 20x revs easily by 2030. I think they could potentially 100x revs by 2030. Okay, so meaning like in the year 2030, they 100x their revenues from what they're doing today. I think that's very much a possibility. 10 to 20x, I think that's in the bag. That's like easy numbers, okay, for this company.
Now, why is this so interesting? Besides the obvious allure of gaining greater wealth. Well, not that long ago, Jeremy wasn't that keen on the company, even if he did have a small investment, however brief it was. So what suddenly changed? That's what we're going to take a look at tonight. But also, what could this mean for us Beyond Meat investors? About a year ago, Jeremy invested a small sum of money into Beyond Meat. Small amount for Jeremy, that is. He had been waiting for the right price of the stock that made sense to him. So apparently, it made sense to make his move, and so he did. Not long thereafter, he cut the stock loose, very uncharacteristic for Jeremy, in his open account anyhow. Now, why did he do this? Well, there were a couple of reasons. I'll let him explain it to you.
So the questions I like to ask myself are these questions, okay? And these are the questions I have to ask myself in a scenario like this with Beyond Meat. I have to say, okay, what is the current market cap of this stock? The second question I have to ask is, what is a fair PE for the industry this company is in? The third question I must ask myself is, what net income would be needed to make the company's current valuation make sense? Not future valuation, just the current valuation at the current market cap. What type of net income would they need to have to make this all make sense? And how many years would it take the company, if they can ever get there, because that's a big question, but if I believe they can get there, how many years does it take for the company to get there? And so we can kind of answer some of those questions, okay? So first off, the market capitalization for this company is about $6.7 billion, okay? So that answers our first question there. What is the current market cap of this company? It's $6.7 billion, okay? What is a fair PE for the food industry? You know, somewhere around a 15. A 10 for the food industry is really, really low. If you get up to a 20, you're talking really high for like the food-related industry. So around a 15 PE is a fair PE for something like, you know, a stock in the food-related industry, okay? So the next question, number three, is what net income would be needed to make the company valuation make sense? Well, that's pretty easy to figure out. We're just going to go ahead and take that market cap of $6.7 billion. We're going to divide it out by 15, and we're going to figure out the net income needed. So the company's going to need right around $450 million of net income to make the current valuation on the stock make sense. So that's certainly a very big number. Like $450 million of net income is not just easy to achieve. That's a really large number, but if Beyond Meat, you know, could get there someday, then the current valuation of this company totally makes sense. And then you're getting, you know, definitely a fair value there, okay? So the next question we got to ask ourselves is, how many years will it take Beyond Meat to get to a place where they're making $450 million of positive net income? And keep in mind, it's not like it's a locked thing that this company ever gets to a point where they have positive net income of $450 million. I definitely think it's possible, but it's not like this is easy to achieve. It's not like Beyond Meat's just going to snap their fingers and be like, whoa, we're making $450 million in net income. That's not the way it works, okay? Here, if we look at the numbers, we're talking about next year, right? Remember, analysts have this company growing 70% plus next year, their revenues. But revenues next year are expected to only be $483 million, and that's if That's if they grow at a 72.5% revenue growth rate for 2020. And keep in mind, to have a net income is the bottom line. So which means, the cost of your product gets taken out, the income taxes, the employment expenses, research and development, all those sorts of things, those all come out before you get to the net income line. So you need an incredibly high revenue number to even get to a place where a company can have $450 million of net income, okay?
In other words, at that time, he felt that the company was too overvalued. Went up too quickly, and even around $77, it was a bit rich and definitely at $112. So here's the interesting thing. Today, less than a year after this video, Jeremy states that under $150, it is a great buy, and he's going to buy more and more. So what gives, guys? Why the sudden change? What could have changed in such a little amount of time that he ends up comparing Beyond Meat with Tesla? I ask myself, have their fundamentals changed in such a short amount of time? Let's begin with Jeremy's first question he asked himself. What is the current market cap? Today, the market cap is about 1.75 billion more, and not long ago, it was quite a bit more. So when we take a look at the stock chart for Beyond Meat, ticker symbol BYND, we could see that about a year ago in January, when he bought them, it was around around $77, and it went up quite quickly to around 112, 114, and that's when he sold them off. And as many of us might know, the stock is quite volatile. It's a growth company, and it dropped a lot here around March. Yeah, Rona. And then it's been going up and up, down and up, and it went up almost around $200 a couple of months ago, and it's been going down again. So again, it seemed that at that time, he felt that 112 was a bit troubling considering the size of the company. Hint, overvalued. All right, let's move on to his second question that was related to the PE value. He was comparing it to the overall food industry, and a PE of about 15 seemed like a good number. And I'm thinking that this hasn't changed in less than a year. But let's just take a quick look at Investopedia for good measure. In other words, it seems reasonable that it should remain the same. And this takes us to question number 3. What net income would be needed to make company valuation make sense? At the time, it would, with a market cap of about 6.7 billion, a net income of about 450 million would seem fair in his estimates. With today's market cap of close to $9 billion, what kind of net income are we then looking for? Well, let's use the same formula. If we look at the current market cap, it's close to $9 billion, and it's probably going to be there very soon. We divide that by 15, and we get just over $600 million. So in other words, about $150 million more. Does it make more sense now then? Which brings us to the next question. Question 4. How many years to get there? If 450 million would take around 4 to 7 years, what would 600 then take? 10 maybe? So I ask again, what has changed that much with the company that Jeremy would do a 180 like this? Have their fundamentals changed? Well, not from a mission statement perspective. As before, and probably all along, they want to make an impact on this planet. Then what has changed? Well, they have gotten a lot more lucrative deals, and their expansion is proceeding with some haste. The brand is getting more and more recognized all over the world. They're expanding into China, a potential deal with Mickey D. They do have a deal with Pizza Hut. I imagine that if people haven't been part of this space, the plant-based world space that is, the current outlook for the company must seem more appealing. Makes sense. However, for those of us who have been part of this world, seen and shared the same vision as CEO Ethan Brown, this was to be expected, if not sooner than later. unavoidable even. We can't continue destroying our planet year after year and not expect there to be a huge change sooner or later, a disruptive change. And what, pre-tell, could be more disruptive than the food we eat? Now, I don't think it's strange at all that it took him some time to jump on the train. This train of ours that will take us all to Lucrativeville. And what a clean and prosperous place it is. But fun and games aside, even for this financial wizard, no one can master every investment space. And this is from Jeremy's mouth himself. Could have been that this plant-based space just wasn't his cup of tea.
There are companies I look into and industries I look into that aren't in my circle of competence. And I've been in this for over a decade now. I run a successful business. Like, I know business, I know these companies, and I'm not ashamed to say there are a lot of companies out there that I don't fully get, okay? And Warren Buffett will tell you the same thing. The guy is worth, if he hasn't given away so much money, he'd be worth well over $100 billion, right?
But with his financial experience, his resolution, when he eventually decides to move into a new market, there is no doubt in my mind that he will also master that space. That is why I'm so happy and excited about what Jeremy brings to the movement. Not only his vast experience and expertise, but his overall notorious track record. I've been tracking his record for a while now, and a lot of the things that he touches turns into gold. Not everything, of course, and he makes mistakes like everyone else. And depending on how you look at it, would he have invested a lot more into Beyond Meat in January when they were at $77 and not taking his small profit? He would almost have gotten a home run by now. And in a sense, a lot more just a few months ago when it was up closer to the 200s. But as we know, at the time he just couldn't see it. But thankfully for a lot of us, he now sees what I've been saying for a while, that plant-based companies are the new EVs. Companies that will benefit the planet but also our wallets. And it's just a matter of time before other high profilers start noticing the trend. And this will have an even bigger impact on the company and the stock price. So it might very well be that when we look back in time, 5 to 10 years from now, the current stock price under $150 will be seen as a steal. Because, like I think many of you know, we can't look at a stock like Beyond from a valuation perspective. Looking at PE value, that would scare off anyone considering that their 4 PE value at the moment is at 775. This is a growth company that keeps reinvesting their money into their business, facilitating a rapid and aggressive expansion, reinvesting into their research and development, with the current goal of making their products more inexpensive than conventional meat, which will be a game changer, by the way, in my opinion. Personally, I think investing in Beyond Meat's current stock price is totally fine, and if the company does 10x and probably more in my humble opinion, it really won't matter that much if you squabble over $20, $30 here and there, because no matter what, you would have made a killing. But I will point out, as I have in the past, considering Rona, and that this is a volatile stock at the moment, it could drop quite a bit in the coming months, as it is partially dependent on the restaurant business actually being in business. But then again, being a growth stock and depending if they get the deal with McDonald's in the near-term future, the stock could skyrocket. You might be safer investing a sum of your hard-earned cash now and then just dollar cost average it. Well, I hope you got some value from today's video, and if you did, hit that like button. And if you want to be part of the family, feel free to subscribe. And just a quick reminder, I'm not a financial advisor. These are just my opinions and thoughts. Do with them as you wish. Hope to see you guys soon. Peace out.